I have one query. Should I start asking query or should we
Yeah,
wait for?
anything is fine. We are here to interact. Anything.
No, sir. Now shall I start or should
Yeah,
I
start.
wait for
Yeah,
more?
please. Yeah, please.
Term insurance, I want to increase my limit. So how to do that? Like, should we? And what is the best way to do it? Like,
No,
should we go with
anytime
the
it's
existing term plan in increase in the value existing term plan, or should I buy a new one?
existing, you cannot increase at any cost because it's a bond contract, no? Where you cannot make any further changes like endorsement, like health insurance. No?
Okay.
But if you need additional coverage, because many people would be having an increase in their salary and more goals aligned and all. No? So if the coverage required is more later on, you'll have to buy one more additional term insurance. No?
And recommended is from the same insurer, or should we go with a new person or a different insurer?
You can go with the same or you can go with others, but you'll have to declare the existing term insurance plan. No? You'll have to declare that.
Yeah.
So that is it.
Okay, sir. Okay, thank you.
Email me. सनत सर आप स्टार्ट करेंगे सर?
हाँ, शुरू कर सकते हैं.
हाँ सर, thank you sir.
So okay, I'm from Bangalore right now. So good evening to all of you.
Good evening sir.
And I will keep the discussion very brief and very precise because the platform, the WhatsApp group is a platform, and there we have a huge discussion, very long discussion, very healthy discussion. A lot of things is already known to many of you, but I will keep it a little comprehensive and simple. I brought a couple of slides that will make it easier for everyone to concentrate. So let me share a few slides, and share screen will do, I believe. I'm using for the first time, so entire screen will do, I think. Yeah, I think. Just confirm if you can see a PPT. Can you see PPT?
Yeah, we are able to see.
Yeah, that's it.
So
there are a few slides which is very basics and fundamental, but it is required to, in fact, to get a conviction about this entire concept of mutual fund. Mutual fund, when we say the word investment. Investment is always a long term. Whatever is short term is trading. So if we say the word long term or strategic or investment, all means same. Now, the role of mutual fund is simple, a financial intermediary. We are all investors here. Resident and non-resident, institution, HUF, anybody. All are putting money into mutual funds schemes, and that money goes into capital market. Now, in capital market, you have equity, you have a debt, you have a commodity, of course, in mutual fund segment. And now also, since mutual fund has been allowed to invest in the overseas companies, overseas indexes and all, so we can also bring currency into the concept. Though currency investment is a little different, but then part of that is also exposed over here. So investors are putting money into schemes of mutual fund, and then it goes to capital market in different kind of asset class. And from there, it comes back in the form of your return that is captured in the form of net asset value. And that goes back to you in the form of dividend and capital gain. Now, this is a complete cycle. So a mutual fund, you can say it's a simple investment vehicle. And it offers us a couple of these words. No, we normally come across portfolio. It offers you diversification. It offers you asset allocation. It offers you financial planning. It offers you why. I will just give you one or two slides, and then I will just open it for free questions anywhere you have. Now, because these are the features of a mutual fund schemes, and so you have some different kind of schemes coming up. Why? Because the portfolio is a word. Different schemes of mutual fund will have a different portfolio. Different portfolio will have a different kind of diversification. Different diversification will have a different kind of asset allocations. That means different kind of financial planning. And so we need to look little bit into the schemes of mutual fund, and that gives us also gives us a lot of confusion, I will say, but also gives a lot of conviction. Look at the equity schemes. Now it's casually arranged, I will say. There are total 11 types of equity schemes in the open net category, and you can see from here it's an index and going to sector funds. Now, I think all of you have invested in mutual fund equity schemes, so not much needed to explain on this part. But this is arranged on the risk and return aspect. Little bit input on the risk and return. If you go higher on the risk, and you should get, I'm using the word should, you should get higher on the return. But at the end of the day, this is all diversified portfolio, except the sector fund, which is a little focused. Otherwise, all are diversified portfolio. And the risk perception is not something that the way it is looking in the arrow, but it is something that it is gradually increasing and very, very tiny increase. It's not big increase, in fact. And you cannot also find return to be substantially different from here and there. It will be around 2%, 2.5%. So ultimately, the benchmark for us to compare is the index. Now, we were discussing in the group also, last 1 year return of index, last 5 year, last 10 year, last 15 year, last 20 years. So that is the index return is the benchmark. You should expect better than this in the almost 75% schemes of the mutual fund. When I say 75%, that is a very big number because mutual fund equity scheme should be somewhere around 1,000. Out of 1,000 scheme, nearly 750 schemes, you can say nearly, they have outperformed this index. So if you say last 10-year index has given you 12% or 14%, whatever number that comes to us, largely you are in the category of getting more than those numbers. This is the past I'm talking about, equity. The moment we say equity portfolio, and then at this point of time discussion happens, people say it's costly. No, we say it's costly. Of course, it could be a costly from certain interpretation. But then mutual fund, besides discussing about cost, which I will come to in the last, there are other schemes also where you will find the cost can be this value can be this value rather I should say the cost can be reduced in the sense the valuation can be reduced in a sense because it's not equity entirely. You can see over here it's a equity plus debt, and you have all kind of equity plus debt starting from monthly income plan going up to little more in equity terms. Monthly income plan will have a nearly 10% equity only. And if you go higher in the balanced fund segment, you will have a higher up to 75% equity. So you can grade your equity in different types of schemes. So suppose equity you are not comfortable, no problem, come to the balance side. In balance also you can choose around whether you want 75% equity, 50% equity, 25% equity, even 10% equity like the monthly income plan and all. Now certain people can say no, equity is also not so far, I'm not comfortable with equity. What are the options left? Look at this. You have 16 types of scheme in the debt category. These are total 16 in number, not arranged in a real manner, the way it should have been, but it will give you a little idea. You can see from here, overnight, that means one night. Liquid fund, that means 90 days. Means your investment horizon is like this. You can withdraw any point of time. So it will be almost little risk. You can say zero risk. I should not use the word zero risk. It's a little technical word, but then it's literally having a no risk. No. And as you proceed from this side to the other side in say short term, medium term, long term, like that, credit risk fund, no. And then suddenly you find the risk going up. But then it is still less than the equity segment. So all in all, you can say that mutual fund offers you equity, offers you debt, offers you equity plus debt. And this we all know. No. So a complete financial portfolio comprises of everything. It's not that somebody has got only equity and so it's a portfolio is complete. Absolutely not. In fact, financial planning uses the word like insurance planning, then investment planning, then retirement planning, then tax planning, then estate planning. No, so all these put together, and in all these 5 things except estate planning, even in estate planning, mutual fund comes into big way. How to transfer wealth to the next generation. That is estate planning. There also mutual fund comes into picture. You have also picture of insurance coming into over there. But largely in all these 5 things, mutual fund plays big role into that. And when we say it plays big role into that, then normally people say whether I have been able to make money or not, this I do not know, but people will have always apprehension about mutual fund. How? This is the reason behind this apprehension. Look at this growth cycle, trajectory of this Sensex. It's a since inception, no maximum. You can see here it's maximum. Right now 72,000 around, and it was abysmally low, 400, 300, 500. Remember this. Now I will just show you one small thing. Just say one day. The graph is not absolutely, you cannot explain the graph behavior. 5 day, difficult. 1 month, difficult. Go 6 months, little difficult, but little. But if you go 1 year and if you go 5 year, and then this becomes a little more obvious. And if you say max, everybody can explain that in long term people have made money. Simple. There's no justification. It is not that is happening in India. It has happened in every country wherever there is a word called development. Country like any country where you do not see some kind of conflict happening or development is not the major means norm of a governance, in that country only you will not find these kind of graph. Otherwise, if you take out any country, they will have a decades of 3 decades, 4 decades of running time when they find the graph is something like northward. In between that, you have volatility. So we will identify the volatility with some idea, like COVID is one volatility. Subprime crisis in America was one volatility. No, in India, GST was implemented at one point of time. That was also one volatility. Demonetization was one volatility. All these are short-term volatility. So short-term means only trading. No, trading is a different ballgame. I will give you just one line understanding of saving trading is that recently NSC came with some data, and it's the eye opener. Out of 10 persons who are trading in the capital market, nearly 8.5, this is the number I'm talking about, 8.5 lost money. 1.5, they made money. And who were those? They were the institutional players. Retail people making money in trading is something a very difficult situation, very difficult, unless you really have a time, a lot of patience, gifted with the quality. No, lot of money, lot of time, risk-taking ability, and then you have a impulse, some we call market neck. If you have those things, probably you can make money. Otherwise, it's institution, they have a research team, their battery support, everything is with them. And so at the end of the day, they make money. So trading is just for some fun sake and all, some amount, and if it's on 1 lakh rupees, you can trade and all just to enjoy your life. But the real growth, real capital formation comes from this investment. And in long term, you can see this. So a lot of people ask that, okay, fine, we have met today, so let us start from now. So people have said that the market is 22,000, so this is costly market. If we talk in terms of equity, what to do now? Now, costly market and cheaper market. No, I will give you one simple. I believe this graph should do. This graph should do. You can see this. This is the last slide I'm sharing with you, and then it will be free open for you as per your questions. You can see here something, a word called price earning ratio. Little technical word, but I will explain you very simple. Earning, what we earn, or I will say what our country earns, or I will say what all the companies of this country earns. That's earning. In a year, suppose my earning is 1 rupees and I am valued 20 rupees, so it's 20 times. If I am valued 30 rupees, so it's 30 times. Higher the valuation, higher is the multiple. No. So whenever this ratio goes up, you are being valued exorbitantly. Whenever this ratio comes down, you are being undervalued. For some reason, could be real or fictitious reason, but for some reason, the prices has come down and so the valuation has come down. Now look at the number. Right now, it's 25. It used to be 25, 22, 23. You can see 30 also. It's a post-COVID scenario. You can see post-COVID, the growth was not happening, but market ran away. Growth was not happening and market ran away. In a sense, you can say the growth was not happening, earning was not coming to the balance sheet PL account, and still the market was running. So it was very costly, you can say. So you can see 25 market, you can see 31 market, you can see 28 market. Now tell me, when the market was 35, 33 P multiple, index was around 60,000. Remember? Now the P multiple is 25 times, index is now 72,000. No, market has gone up and P multiple has come down. Why? Earning has gone up. Your performance is there. Country is growing. Companies are growing. So companies earning per share is growing. So companies earning per share is growing. So they should command higher value. Compared to post-COVID situation, we are not commanding the real value. But if you go beyond, if you go further, we will find sometimes 17, 19. No. So this is something, a valuation segment. I'm just closing it over here. So this valuation is something very critical area. The only reply to these fluctuation in the volatility in this valuation is that you should go long term and go in SIP form. Simple SIP form. Now SIP do a wonder. The moment I say SIP, I will just show you one last Excel, which is in fact already, so I need not to do on that. Somebody, a small child born in the home, and after 25 years, we expect him to become industrialist. Now, all of your doctors probably would like to make him doctor, but still, suppose you want to make him industrialist, you need capital. Without capital, he cannot become industrialist. No. So 10,000 rupees per month he is sparing for investment and take out just index. Forget about any diversified fund, actively managed fund, performance, alpha, and all those technical words. Forget that. Simple 10,000 rupees with 12%, and then in 25 years, your investment is 30 lakhs rupees, your value is nearly 2 crore rupees. Fair enough. One can start business at any point of time. And look at this. What is the opportunity? Those who failed, no, 9% was good enough opportunity for us. And then the value from 1 crore 87 lakh rupees, it came down to 112. Nearly lost 60 lakh value. Now it is 7% around. In the fixed income syndrome, 7%. And then look at the value. It's almost half of what probably 12% can offer us. So should we take this risk of investing in equity in long term? It is basically a risk reward premium. 7% gives us 80 lakhs rupees, 12% gives us nearly 1 crore 80 lakh rupees. So now we have to make a choice. Should we give a spare time to understand and read it? That is something. So normally I say, I'm stopping the sharing, coming to the screen now. So normally I say in my program, wherever I go and speak, and of course, whenever I get an opportunity to speak, picture in picture, I think I should cancel, no? Yeah. So whenever I speak and all, no, normally I always insist upon only 3 things are required to make money. One, of course, if you are born from a very rich family, then of course God has sent us to the money. That's a different issue. But investment-wise, equity, we are lucky guys that we are born in India when actually India is growing. Our parents had not this opportunity. We have this. Next generation, I am not so sure about whether when they will be in 30s, no, presently 10 years and all, and those will be 30, and how the economy will be performing that. But I'm not going to comment on that. But next 10 year, 20 year, if you see, golden opportunity. Many reasons are there. We are not going to those reasons. But the only thing is that, no, if economy grows, the company will grow, and if company grows, the company's earnings will grow, and if company's earning will grow, ultimately will get more value. It's like that. Suppose your salary increases, you get promotion, then society responds in a different manner, higher valuation. So same way over here. And anybody who feels equity is a damn costly or equity at this point of time should not go, SIP is the one answer. Recurring deposit. Somebody wants to be a little more experimental. Okay, fine. Let us go into the hybrid segment. Equity debt is mixed together. The moment you reduce your equity, you are reducing the cost by that. So combinations of these different schemes and patience, nothing more. A small amount can turn into a big amount, but patience will make ultimately. I have seen people with a lot of knowledge could not able to make money. And I have seen people with some trust, some element of trust, patience and discipline, and they have been able to make huge amount of money. So this much only is desired. So investment through mutual fund is a very simple process, not difficult. If you go to the stock, do trading, that's a very complex process. If you do even investment in a stock, long term, that's even more complex. So we are leaving that aside. Simple confidence, trust, discipline, and that gives us enough opportunity. I think this much is good enough for, because you're all genius guys, no? So this much is good enough for you. Over to you, sir.
Thank you, Sanat sir. Thank you very much. It was a wonderful talk. Sir, what would be your advice to all? Many of us keep discussing markets are all-time high. We understand every high will be followed by another high. So if someone has lump sum, how should that person be handling that huge lump sum right now?
Lump sum is a big amount. Of course, it's a big subject always. See, at this point of time, the moment we say lump sum amount, we want to invest lump sum amount, few things has to be always considered. One, the past experience with the market. Everybody has got different type of experience, and that embolden us, the kind of strength that we get from the past conviction or the confusion that we have. Suppose somebody has got a very good confidence over the area in the market, no, for him it's not a big deal. You can be a little defensive at this point of time with a lump sum amount, but still, if you have a good confidence on the market, rest assured, market will give you opportunity. But suppose you had not very good experience, not very good confidence in the market. So for him, the response is that let us come back from equity a little lower and go into the hybrid segment. So past experience, the personal risk-taking ability, the past experience, and when actually you require the money for redemptions, when you are going to use the money, that purpose is also important. Suppose you need after 2 years, forget equity. 3 years, I will say forget equity. Anything less than 5 year, normally I recommend that please go into the hybrid. And now you will say, why I should follow you? Of course not. In economics, in finance, everybody is right. No, any direction is right. It's time that tells whether you are right or wrong. So the conviction is very important. I say anything less than 5 year, 10 year, at this point of time, until you have not very strong conviction, you should be stay in the hybrid segment. But those who have got good confidence in the market, good track record with the market and all, they can even go for the equity. But less than 5 year is not very conducive, I will say, for the equity. More than 5 year, definitely you will get an opportunity before that also and after that also. So lump sum, a little careful with these 3-4 factors, and then investment is of course has to be done.
Thank you, sir.
So, sir, conclusion, like if we get some lump sum and then we want to invest, and the time horizon is less than 2 years or less than 5 years, going into an hybrid investment is always recommended.
That is what my personal, it becomes more of a personal. So less than 5 year, then naturally one should go, you see, 100% equity or 75% equity hybrid. No, almost makes same sense. In fact, if there's a more volatility in the market, the 75% hybrid perform better than 100% equity. I could have shown you, but since I have exited, so some other day I will show you how asset allocation, when rebalances, it actually works out to you. So if you find market to be more volatile in the coming 3 year, 5 year, no, then 75% equity hybrid, 50% equity hybrid, they perform as good as sometimes equity performance. And risk-wise, of course, it's drastically reduced. So that way it will be my perception. I will go probably because of my age and all, probably I will go like that.
Okay. And then if we don't need for more than 5 years, going into an index fund makes more sense in terms of returns as well, right?
Safety, and you can say safety is also one feature. One is the way actually how far we are able to understand the performance. Index is one where performance understanding becomes very quick. No, we see the market and we analyze. Yes, we are going to get this. We expect the market to do like this. We analyze this is what. So index fund is most transparent and very easy to understand. And so everybody should, of course, have some amount of investment in portfolio of index fund. Beyond that, of course, diversified fund of any category, multi-cap diversified or mid, small, large, all does almost same kind of wonder. In fact, there are a lot of studies done. Some people say large cap diversified does better than the mid cap and the small cap. There are no such studies there which proves that large cap diversified gives you more return than the mid cap or mid cap gives you more than the small cap. In different time frame, all have performed. No. So the moment you go in one category diversified, after index diversification, that is all. And you choose as per your convenience and as per your trust.
Sir, one question, sir.
Yeah.
Like in many of the funds, what we see the returns, like many times Dr. Deepak says, don't chase returns, accumulate. That's what we also follow the same funda. But what we see in majority of this, the returns are good at by 3-4 years, and after 5, what we see is coming down. So is there any role like where we should, as we do in stocks, to like redeem those or take out and book the return, book the profit, or we should continue? Suppose my goal is at 10 years. Should I still book at around 5 years and start something new, or should I continue the same funds ongoing?
So I will be commenting on this little carefully and with my experience only. My experience, I joined this industry in 1994. Since then, I am with this industry. So I have seen in this industry, there are some very active people, those who have got a lot of discipline and patience as well, and also activities. This is a kind of gift, I say, that people are active, but still having patience and the trust with the market. So I have seen they are churning after 3 year, 5 year. I have seen them, they're churning. And I think their success story has multiplied so much that has given a lot of people an idea that we should do it. They could be able to do it because of their sustained engagement with and also having this ability to have a trust and the confidence. But in normal case, if you find no person with a stayed for long, they have been able to outperform any kind of active management of the fund. That's one thing. But people ask, why it happens normally that after a good performance, you will find some kind of saturation happens always. Now it's a law of regression to mean, and we all have seen in the science classes. Any performance cannot be sustainable for a long term, so it has to regress to the mean. Either you perform early or you perform later. That is the simple thing that happens. One more thing probably you may come across when you go through the papers and writings. No, people say when the schemes are smaller in asset under management, AUM is less. The less number of investors are there in this scheme. The fund manager at that point of time have a hunch, I'm saying a hunch, that even if he outperform the market, he will impact less person. And if he underperform the market, even the less person will be again impacted. So his personal risk in terms of your professional ability to prove outperformance and all, no, he can take little more risk over here because if he'll perform better, he will have a better career ahead. So when the schemes EM are less, at some point of time, they do take risk extra. They could be extra vigilant also. But when the scheme becomes 20,000 crore, 30,000 crore, 40,000 crore rupees, the base is now very big, number of participants are very big, expectations are now very, very enlarged. You will find such kind of these schemes are always in the moderate category of performance. They are never in the highest category of performance. But they are in the first bracket. Why? Their expenses comes down drastically. Because SEBI has given a condition, put a condition that the larger the AUM, the lesser the expenses. So when the scheme AUM basis goes up, the expenses automatically come down. Suppose 50 paisa, it comes down. It of course comes with 50 paisa, 60 paisa. This is a differential that they can create with the extra risk. So at the end of the day, whether you are with a smaller AUM or with a larger AUM, with aggressive or with a less aggressive, because of expense factor and the action in the market that you take, vis-a-vis it comes to almost same kind of regression of me. So I will not recommend this, especially professionals like you, because you have a very limited time. I believe this is what my understanding is.
Yeah,
so I think for you, until your goal is near to that, suppose goal is on 10th year and you have achieved your goal at 8th year, 7th year, 9th year, at that point of time, you can do some kind of jugglery. But before that, probably it's not advisable.
Okay. Right. Thank you.
Hello. Hi.
Yes, sir.
So nice hearing actually the talk. And we always hear from Dr. Deepak regarding all these things. And he is one person who has actually motivated us to stay in Nifty index funds for a long time. Otherwise, we'll be wandering everywhere. So I have two questions which has been discussed multiple times in our group, which is very controversial. This is regarding the house. I think this is a hot topic everywhere, and everywhere in the media or social media, everybody is telling do not buy a house. It is the biggest mistake of your life, or it is giving a negative return, and you should never ever do it. You buy a 1 crore house and you will get only some 15,000 rupees rent. I can understand logically that correct, but it is very difficult to digest as an Indian. I don't know why. So I just want your input. So regarding buying a house across, like we are all from UAE and in India. The reason why I came to UAE actually because of the house loan. This is the truth. See, if I have not taken the house loan, I don't think I should have come to UAE. I bought a house and I wanted to clear that loan fast. So that's why I came to UAE. If I have not taken the loan, I don't think I should have come to UAE. So I'm just trying to tell. So what is your input regarding this?
I will give you two experiences which in fact I personally encountered. Very small, very briefly. One, I was giving a speech in Raipur in 2015. It was 2015, long back, almost 9 years back. So in Raipur, it was basically on the different asset class I was discussing. So one gentleman would be in the age of around 65 or 70. He said, I want to speak few sentences. I said, please come and have a speak. And he said few sentences which I am repeating, quoting him only. He said, Raipur became capital of Chhattisgarh in 2000. And he said that those who had an investment in the house and the real estate in 1990 till 2000, they could never able to make even a single penny out of that. But the moment it became capital, 2000 onward till 2010, people were earning in crores. I said, then sir, he said, those who came in 2010 seeing the 2000, those guys could able to make just normal return, which they probably would have got from anywhere. And I said, then thereafter in 2020, what will happen, sir? What do you think? He said, they will be losing the money. They will not be able to make money. What I mean to say is that house purchase is a local price concept. It's not global price concept. So at what point of time you are there, when you are buying, that becomes a big reason why some people had capital gain and some people had a capital loss. It's a local pricing concept. That's one thing. Second, I will cite, I was in Mumbai for one of the program and there very senior person of REIT, he was handling REIT. And he was telling, I'm just quoting him. He said, it's a normal phenomenon. He says, it's a normal phenomenon that whenever somebody buy a house, he buy either of past 10-year savings or he will be buying for future 10-year savings. Means the kind of past 10 years earnings, past 10-year earnings or future 10-year savings. That is the normal budget of the people when they go to purchase a house. Now consider this. Past 10-year income is of course already spent. So we'll consider the next 10-year savings. So whenever you buy a house, this is the normal psychology. That is what in market a lot of people give interpretation. Now the third sentence that I will be saying and complete the story, that if you want to stay in a house, you want to consume that house, you want to use that house, probably then you should buy the best house that you can think of. But suppose you are investing, you call a purchase of house as an investment, that is very, very risky, much more riskier than the equity. Because time you do not know, the local price conditions probably you do not know, and the litigations, possessions, rakh-rakhav, upkeepment, everything are so complex process that investment, equity is much better investment than housing from that point of view. Suppose you want to stay in the house, then you just look at when you want to stay, immediately or later on. If you want to stay immediately, then you have to see the all amenities around that. If you want to stay 20 years down the line at this point of time, then you have to see that 20 years down the line, you should get all those amenities. So you can buy cheaper at this point of time. That is the logistic arrangement that people should do. Otherwise, investment word with housing is something which is the contrary. It runs opposite. Something the way I probably perceived it.
Thank you so much. I think it is the same view from most of the people. As you need to, if you are staying in the house and enjoying, then it's okay. Otherwise, no.
Otherwise, it becomes a very costly affair because see, in equity you can do incremental investment, incremental withdrawal. In housing, you cannot have an incremental withdrawal or incremental investment. So that is the big.
If you are buying a house, it is better to take a loan or better to pay by cash.
I'm a finance guy. I always insist upon you should take loan. I'm a finance guy. I always insist upon you should take loan. Number one. Number two, why I say that you should take loan? Because the moment you have an inflation in the system, you take loan of a 9%, if there's a 4% inflation, so actually you pay 5%. And then you have a 1% tax relief. So you actually end up paying 4%. So in any inflationary economy, one who is taking loans are at the advantage. One who is giving loan, which is a bank, are at disadvantage. So whenever inflation goes up, there is the interest because they are at a disadvantage. So we are going to be in inflationary economy for next at least 2 decades. You can say, you can debate on that. That's okay. But even America right now has got around 5.5% of inflation. We of course have around no. So inflation is going to stay. We need inflation. So whenever inflation you see, you end up paying less amount. And government policy all over the world is that you should incentivize somebody if he's going for capital formation. So you have another 1%, 1.5% relief from the tax point of view. Except that it takes a little part of the mental, you can say, comfort level. Otherwise, if you have this compartmentalization of house money, investment money like that, if you do that, you will get a lot of satisfaction on that. But then in any inflationary economy, taking loan is a wise decision for a finance guy.
Very nice, sir. What about investing in a US market, index funds, ETFs versus only Indian? Do you need to diversify or no need to diversify?
It's a very complex subject, and I used to be very, very strong votary of investment in US. Now it's more of my personal opinion. Maybe I am a little biased on my understanding. I used to be very, very strong votary of investment in US economy. You can say in US dollar, anywhere, US dollar. Say a couple of years back, say 5-6 years back. For last 4-5 years, my perception is that if the society is not growing, society is not enriching itself overall, then the nation ultimately does not grow. That is my perception. So it's a little of socialistic approach, but in capitalism also, society has to add value, add wealth. Now in America, what I perceive is a personal opinion. America could be growing with GDP, even with 3%, 2%, that's okay, 4%, okay. But society as such has got distinctiveness in the earnings. We see a lot of news is coming from there. So at this point of time, for the sake of diversification beyond India, America is the best destination. But if you want to put more stake in America compared to India, then it becomes risky destination. So this way I should see, this way I go with.
Thank you, sir. Thank you so much.
Sanat sir, I have a question. We were talking about home loan and all. So these days we have OD based home loan, right? Say we have that max gain from SBI and others, right? Which is basically a OD. So if somebody has taken a OD loan and he's depositing whatever savings he has in that loan and the interest reduces. So is it wise to fill that OD loan so that the interest becomes zero, or we can invest some part of the remaining money or the savings in, say, mutual funds or any funds which have better returns than the rate of interest that we are paying as part of the OD loan?
Yeah, I have just one disclosure to make over here is that, no, see, finance guy, they are the most shrewd guy on the earth because they survive when you invest in their words. No, they are the most shrewd guy. They will never be at loss. Understand? Between in the case of exchange, the finance guy will always be at advantage. So whenever home loan you take in any form, whenever you take loan in any form, they will charge the same rate of interest. Whether they prepone it, they postpone it, whether you pay early, whether you pay less, IRR of that investment will be the same one. Finance guy, finance institution, they will do like that. They go by this calculation. See, it is that if somebody have an intent to pay early, so they will be charging interest in that manner, so that they end up getting the same kind of IRR. So it does not make much of difference unless you have some special effort in prepaying and getting that benefit. Otherwise, in general, it boils to the same number.
Okay, thank you.
In fact, there used to be, I remember, one word I am just missing, that SBI in fact came with. First year they used to give certain rate and thereafter they used to give certain rate, and that was a teaser kind of rate. And a lot of people fell prey to that rate, but ultimately at the end of the day, IRR of that cost was also the same as that of the other one. So the person, the most difficult job on the earth is that to take money from the other's pocket. And this is our profession. So understand, this is a very shrewd guy, those who are in the finance, and so they will earn first and then they will let you to earn.
I have one more question, sir. This is because you are a finance guy. Consider a situation: you buy a property, and the property appreciated. For example, you buy in a half-plan property, and the property appreciates nearly 100%. In 100% to the half-plan plan. For example, you have to pay some amount, maybe 30% you have to pay, and the property price overall has increased by that 30% you have paid plus another 30% extra. But you have to actually pay the rest of the loan. Yes. Do you feel it is worth to sell the property and make the profit, or do you go ahead and live in that house?
I think it's a very difficult. If the property becomes good enough, people will not sell out of emotional attachment. Wife will not allow to sell. Number one. Number two, if property is also good that way, one should not sell it, because probably if you sell it and then buy the next property, the deal might not be as good as the first deal. So law of average comes from the picture, and actually you end up with average amount and average kind of property. So if you have a good investment, whether in equity or in real estate and all, I think better consume and enjoy it instead of selling it. And I think pre-demonetization date, people used to have a multiple number of flats. those days, because cash payment used to be very, very easy, and PAN and Aadhaar were not very, very, it was not synced together. So those days people have really done this kind of trading, because they had a 1 or 2, 3 houses for a stay, and the remaining fifth, fourth, fifth, sixth flat they did it. But now the transactions of this nature under the radar of many things. So tax is also big issue, and then the handling the big ticket is also big issue. So I have only one thing, that if you have purchased good property and it turned out to be very good property, it's a godsend opportunity. Enjoy the property.
Okay.
It's a better.
Thank you so much.
Thank you, sir. Thank you, Deepak.
Sir, can I add something, sir?
Yeah, please. Sure.
Now, let's say if we decide we need to have a property for living in, at that time it is better to live in instead of worrying what appreciation it is happening, because that is never going to be an asset there. Because the house where we live in, the car where we drive in is actually not asset. It is our own requirement and also a recurring expense, because running a house will need an expense. So we are planning to buy a house because we have either sufficient corpus or we are opting for an EMI, and we don't want to be on the rent. So once we have decided this, I think it is futile thinking about what is the cost of the property where we are going to stay, because that doesn't matter. Because we will not be selling this and buying somewhere in a bargain. Very difficult to get this transaction right. We expect it to go high and immediately get something low where we can stay. In real estate, it is very difficult. Unlike in stocks, where we know this stock is going to have has achieved the heat, steamed up, and we book the profits, and we buy some other stock which is at a discount. In real estate, it is very difficult. And second thing is, in real estate, we don't account multiple things which go into the cost of the investments there. Like in cashback card, we get 0.5 extra. We go to one more cashback. This bank is offering 0.5% more interest. We run into that. This fund is having less expense ratio, so we jump into that. But in real estate, we discount many of the cost. The cost will be exuberant, including the efforts made, the time dedicated, the opportunity cost, and also brokerage, the fuel spend. It is enormous actually. And at a young age, it is very easy to manage it. But once we become 50s, 60s, what if we have some dementias and all, or we are not capable enough to handle the pressure of the tenants, and not to forget the issues of the tenants, which can creep in.
Saying it's worthless and just 50.
Jake, Sanjay ji, can
And
you
this is
please
just
go on
one
mute?
part of it. You don't know the whole thing.
Somebody is
She's
speaking.
calling on my
Yeah,
phone and Anit's
that's
phone
Mr.
using
Sanjay.
Dekrit's phone. This is contact and shouting at us.
Or as a host, Deepak sir, you can actually mute him.
One tournament. We did a tournament, so we had a trophy last year. Like 2023 we did.
Hey, sir, can you hear us?
Trophy already done.
Yeah, I can hear.
Yeah, but then
I'm
they were
looking
asking
for the option.
I was like, I'm done with this. I can't take so much of this. So I just left it. I said, take the trophy. Take it. But
Sir,
still they're
come
arguing.
to participants and
This
then
young
Sanjay.
generation.
Yeah.
Now Jack's mom is not gonna come.
Yeah, done.
Sanjay, yeah, sir. Thank you.
So multiple costs go into which we negate, which we don't take into account, because for other investments we are looking for 0.5% or 1% more. PPF is giving 0.5% more. We are rejoiced, but here we negate many things: the EMI cost which we pay, and the opportunity cost, and the handling cost, the maintenance cost, the property taxations, litigations if any, the paperwork which we check, then the registration cost. We negate it to a larger extent. I feel as a real estate investment for common people like us, it is less of headache. Financial asset classes gives the flexibility. Let's say life is not uncertain. Also, the stay in any place is not certain, and more remotely we go off from that particular real estate where we are holding, more difficult it is. Now we may say there are brokers, no brokers, and all. Next away is there. They may manage, but they're going to eat a significant chunk of the rental income. 15 to 20% is going to them. 30% you are sharing with the government. So what are you left with? And also the rental in India is pathetic. And coming to investments overseas also, There are many examples, personal examples, which I have encountered of other colleagues and all, where they have taken a property in 2008. Lakhs.
Deepak
And
sir, your
also the
voice is-
rental yield has come out. Can you hear now, sir? Can you hear now?
Can you hear? We are able to hear.
So rental yield also has come down. That has significantly affected multiple things actually. So unlike we keep on thinking that the property prices will always appreciate, there are areas which can be subjected to depreciation also, and also to increased cost and reduced rental yield again. And again, if big chunk of it is in illiquid asset, one cannot sell a bathroom to get to fill the fees of the child or any dream for that matter. It is extremely difficult. There are many people, many individuals who are asset rich, real life examples, not some bookish thing, real life examples. They are asset rich and liquidity poor, and they end up having a life misery actually. And that too in the age where money is very necessary. Liquidity is very necessary. As long as we are earning, everything looks like a jolly ride. Income aa raha hai, salaries aa rahe, you are paying the bill, credit card bill, everything is going on, EMI ja raha hai, sab kuch ja raha hai. But at one point, the body slows down, the income is going to stop unless one is into something of a passion, which is like a business. They continue getting some income. Majority of us, we are going to stop at one point. At that time, it is difficult managing all this. And also the succession planning. The kids will be on their own one day, and they will be least interested where we are holding real estate and all. They would want something very ready made, that okay, mummy papa say it is easy to transfer, and they are in other part of world. We don't know, they may be in India, any part of India, or they may be in any other country. It's extremely difficult. So succession planning, cost of investment, ease of investment. We can invest in financial asset class any amount. A person with 100 rupees income can also invest. A person with 1 crore income can also invest. A huge flexibility. And when the money is needed, irrespective of market is up or down, doesn't matter. If someone has invested 1 crore and if that has become 50 lakhs, if that person really needs 20 lakhs, redeem it if you have no other option. Money is money. It has to be used for certain things. You don't have to rely on third party or someone beg, borrow, or look for buyers at that time when you're in crisis. In crisis, liquidity is very important. That's it. Hello?
Sir.
Yeah, done. I'm done. I'm done.
Yeah. We want to address from anyone?
We see some hand raised from Prashant.
Hal Prashant Bhai, he has been the most active.
Finished asking question.
Sanat sir, what's your take? How do we organize these meetings? How frequently we do it? I think we should make it a ongoing thing, regularly at least. Just say people may come in, it may increase, decrease, whatever. But if there is a continuity, more people will club in. Some topics of interest will be there. We can have some agenda per meeting, a fixed agenda, a small, simple thing, whatever there is a common consensus, and one speaker and question and answers. What is your take, sir? How frequently we take it, sir?
Yeah, it's a good one. What we can do is that there are a lot of topics which can be discussed. So for a day, we can decide one topic in advance, say 3, 4, 5 days in early, so that people can make up their mind. Like, for example, one is behavioral finance. Now,
Yes,
all have
yes.
money, but the treatment of individual with the money is different for each one of us. A lot of theories, a lot of discussions are there, a lot of examples are there. So one day we can discuss that. Asset rebalancing. Now, one day you can think of asset rebalancing. One day you can think of taxation on all these investments aspects. One day you can talk of debt. Debt is a very big subject. You can go on, 2, 3 days. So you nearly have at least 10 to 12 topics for next 3 to 4 months. And after that, you can again go back repeating or the new events any events that is happening all over the world will have an impact on the investment behavior, not on investment value. I'm saying investment behavior. So to understand the meaning of the relationship between those incident and the investment behavior, so that can also be planned. So these things, of course, should be done periodically. You can decide bankers say second and fourth is like holidays. So you can also decide something like that, and that will do.
So I think do we do it every Sunday, sir? Sunday ki Sunday, Patshala, whatever.
I'm fine with that.
Once a week, even if someone is not ready, a casual talk, at least we say hi, hello to everyone, and we get to know everyone at least individually. Instead of that,
and share
messages.
personal experience, sir, actually.
Personal
experience, at least.
Yeah, in person. We get to see people and we get to speak, see each other. That is more important.
Yeah, sir.
Physically, it is not possible to get, but virtual world, we can definitely have at least Sunday.
Yeah, virtually is good.
Yes, sir.
Some topic. If there is no topic, at least we can say hi, hello, speak to someone.
Bitcoin.
Yes, definitely Bitcoin. There is one movie which has come, documentary on Netflix, Bitcoin.
Oh, is it Bitcoin?
Yeah, Bitcoin.
Telegram में है क्या?
मैं डाउनलोड करने की कोशिश कर रहा था, नहीं मिला कहीं.
I think Bitcoin is going to the ETF. They are planning to have a launching ETF platform, I think.
Yeah, ETF platform, but USA this rejected one of the ETF.
I think a lot of the USA finance people are rejecting it because it will bypass bank.
Yeah, no one wants to. Now, if we consider example, if there is one big hospital and there is a small hospital opening across the road over there, the big hospital will try to object to it. So when the central bank currency is there, why would they want a parallel currency to be there? They would definitely object to it.
But if it comes into, see, there are some countries, they are willing to accept this. Actually, remember, in UAE, they were accepting Bitcoins as a payment for real estate. So
Yeah.
I still remember advertisement, 4 Bitcoin for 1 bedroom, something like that. So I think because it's something like believe Bitcoin or don't believe. There are two types of people who believe and who don't believe. And I don't know because I don't know, whoever I've asked, how much did you invest in Bitcoin? They'll only say some 10,000, 20,000. Nobody has guts to invest a lot. I don't know. Even myself.
Yeah, because see, I believe that if you believe in any asset class, at least 20% of a net worth should be in that. It will make or break you, whatever it is. So only then it will have substantial. If you put 1 to 2% of a net worth, even if it becomes 100, 200% returns, it is really not going to matter in the wealth creation of that particular person.
Yeah.
Even in mutual funds, why some of us always keep saying indexes, we don't know how the active funds will perform. Managers will exit off. And there was 4 running in this Access mutual fund. Same thing can happen to any fund house. Peace of mind, we don't know, don't worry about returns. Peace of mind, why be attached to one fund manager? He's doing he's superstar. We don't want to get our daughter married to him or his son or whatever. We want
what you told is correct. See, I still remember the first time I invested probably is in 2010. First time when SBI manager told me to buy some PPF. PPF fund, he told me it is very good, open it for 15 years. So that time, because of him, I invested 1.5 lakhs. Afterwards, he told me some insurance. I think now I have realized that insurance has given me only 5% return over 15 years.
Yeah, right.
So, and when we say this mutual fund, I'm talking about 2010 to 2018 or 19. We always use a very small amount for mutual fund, like 30,000 per month, 40,000 per. I don't know, but we are willing to give 1 lakh per month as a home loan. That's what I'm trying to tell. I don't know how is our brain is willing to pay 1 lakh per month for a home loan, but we are willing to pay only 30,000 for mutual fund. I don't know what is this logic. I don't know how is our brain working like this. I think finance sir should Bharadwaj should tell us why this is happening to us.
Psychology, he'll speak about psychology now.
I will just say two sentences for this. There's a concept of immediate gratification and delayed gratification.
Right.
Investment always offers you delayed gratification, and so we are always less happy about that. Purchasing house, purchasing gold gives us immediate gratification, and so our brain are trained for the immediate gratification. And that is the basic reason many economists have thought on this issue, that ultimately, despite whether you are trained or you are not a trained investor, both behave in the same manner. Like people buy at higher market and sell at the lower market. Whether you are trained or not trained, people have a general behavior like this only. So this has been explained using this, that if you have something tangible, immediate gratification, our temptation to say it yes becomes multiple times. That is the only reason probably that is why people have.
I think it is behavioral investing.
Yes,
I think we have to get out of it.
Enjoy today.
Let's say one
Wait
thing.
for tomorrow.
I will say one more sentence, simple thing. Investing in the name of child and investing for the child. Now, when the moment you put investing in the name of child, emotionally, oh, it's the baby's money, we will not withdraw. Same scheme, same portfolio, but the moment you invest in your name, you will withdraw. Okay, let us go foreign tour, withdraw the money, use it. No, so emotional angle, that is the. So this is our behavioral aspect. Salesman uses this for the purpose of getting sales done.
That is what many.
Dr. Deepak's. There are some taglines for Dr. Deepak, like no only term insurance, only health insurance, no investment
No
plus
real estate.
real investment and real estate.
No, I'll tell you, Halprasan, by what happened. The real estate guys, they keep pestering, you know. So one person said, yeah, I'll give you a good deal and all. I said, I'm not interested. He said, but still I want to meet you. I said, see, I am a jobless person. I have a lot of time, but you lose your time. He said, no, I'll still meet you. He came to the hospital. We sat in a canteen. Then he said, these are the returns. It will give you so much. I said, why are you not investing? If it is so, this thing, you should be taking a loan. You should be investing. Why are you suggesting it to me if it is so lucrative? He had no answer. And they came up with that. You have heard of that convertible debentures, right? This thing and all, 15% on dollars and all. So even then he said, if you're not for this, go for this. I said, why is any institution giving 15% on a convertible debenture, that on a dollar, when the interest rates are 2%? At that time they were 2%. Now they have increased to 5-6%. He said, no, because we are planning to list. I said, I have been hearing this story for 9 years. If you're listing, why was it not listed long back? So they will lure you. The most important thing is telling no to them. That is the most important thing.
True,
because the pictures which they show you, the housing and all, it looks that it's a dreamland, swarg and all, and you'll be tempted, definitely tempted. A person who is in his own senses will also be tempted, even if there is a no need, no requirement also. And they will lure you by calling you at that mela and all that real estate mela is going on. Come to this hotel for free coffee, free snacks. We go, and many of them sign their deals over there. The bank is sitting there, a single call, salary certificate and all. And many people have fallen into problem into this. Many have come as a team. 3-4 members have taken a house, and during COVID they lost a job. 3 people left the country and back to India, and 1 person is stuck with the loan there. So now who pays it? Because we tend to take things permanently. 15 years our jobs will be guaranteed. Our life is going to be guaranteed. Anything can happen. Not only mortality, morbidity can happen. We can be bedridden. We can be off the job for any reason. So I believe that, and many people would say that, okay, I got this much returns. They are lucky enough.
Recently, I was seeing I think it was in WhatsApp recently in our own groups, living rich and dying rich. What is your comment?
There should be balance between both. You have to live for today and you have to live for tomorrow also.
No, there was a statistics. I don't know. I don't remember number. In Indian families.
Yes,
I'm not talking about the predominant families. They don't even use 30% of total their life earning. I'm talking probably in the middle class. I'm not talking about the extremes. They don't even use 30% of their total earning. So what is your comment?
Why do they not use this? Because they have invested majorly into real estate. One property, buy real estate. One property, buy real estate. They have no liquidity. They have a lot of assets, no liquidity. And they are the ones who will be torturing the kids that after all this money is going to go to you. You look after us. All this emotional atyachar is going on. That only happens in Indian culture. Who had asked them to invest first and foremost in real estate? Some liquidity should have been there. And the pension which they get would be definitely be insufficient. So when it is insufficient, if they had invested something in liquid assets, they were definitely not going to be dependent on anyone. In the advertisement, SDFC Life, they show, na, Sir, utha ke jio. And now, if it was so easy that taking a SDFC Life policy and Sir, utha ke jio, everyone would have taken that 10 policies and puri zindagi they would have done Sir, utha ke jio. But they don't have liquidity. That's the point. If you have liquidity, they do not have liquidity because कोई मेरे से पैसे मांग ना ले, मेरा property में लगा हुआ है. See, bank balance मेरा खाली पड़ा है. That must be their aim actually. Instead of giving money to some.
Because there is, I think, investing in equity has evolved over a period of time. I think probably after the COVID, I think the numbers of investors have increased.
Because they had a lot of time and digitalization boomed in. Demat account opening was initially very tedious. You had to go physically to the office, do this. KYC was a big notorious thing. Now KYC is done online. Aadhaar integration has happened. So घर बैठे बैठे हर किसी ने demat account खोल लिया. Zerodha has spoiled people. Even though they say that future and option trading is all loss making and all, but they are also offering that same thing. It's like they are offering cigarettes and they are giving a warning on it. And people are.
You should use cigarette or not.
Yeah, that's it. But who does that? When you see a cigarette, everyone is tempted there. When you see a glass of alcohol there, everyone is tempted. Even those who doesn't want to drink it also. Taste करे कैसे होता है? और taste करते कर. हाँ.
What is your opinion on PMS, bhai?
PMS I would definitely avoid. See, PMS, portfolio management service, right?
Yeah.
So initial requirement was 50 lakhs was the token size. Now 1 crore is the token size requirement. And that fund manager is going to buy, sell stocks. And every such buying and selling will definitely have the tax implication on the investor. And how it performs, you don't know. And exit strategy is also problematic there. Better would be an index fund. Better would be globally diversify. Low cost vanguards. Better would be doing that. Where you can even invest 100 rupees, 1,000, 1 lakh, 1 crore. If I had 1 crore surplus now, which I have no, 300, 400 is a surplus, I would have invested in the existing investment. People graduate. They would start with small stocks, penny stocks. Then they understand this. Then they'll go to a bigger stock, large caps. Okay, let's try this. Then they'll go to mutual fund. Then they'll go to future and option. Then they will be day trading. They think that they're graduating. But sticking on to the bare basics is all that is needed. People, HNIs and all will think, okay, let me diversify. Let me put one more into PMS. Why not in the same funds? Why not in the simplified things at all? Why? How many PMSs will have? And what is the historical return of PMS? And many of the PMS themselves are launching mutual funds. Many of them. Paramaric was started with PMS. Now it is just offering exclusively mutual funds now. There must be some reason. So why PMS? Why? Simple things, simple dal chawal are better than some Angrezi name to that, and you are paying the tax for whatever churning ratio is happening by the PMS manager there.
Okay. What is your opinion on lump sum investment now? Current situation, I have a 25 lakh.
If I had 25 lakhs, I personally would push all of it at one go and forget it off. No market level, nothing. I personally done it. I got transferred from one hospital to another. I got end of service benefit, a significant amount. I just pushed it in Indian equities and forgot of. एक हफ्ते में डाला होगा.
When it happened, I mean,
this happened. No, this happened in 2021 end. 2021 end. So all I pushed at one go. Forgot about it. Instead of playing STP and all, or playing SIPs and all for next 12-15 months and all, that means we are assuming that markets will come down from this level. So I want to place SIP. Lump sum, I personally believe, put at one go, forget it. Whatever may be the market long term, it may or it may not give returns, but something is accumulating at one place. The corpus is growing there. Returns may or may not follow, but when you put a significant corpus, that is also growing.
Yeah,
when
one more thing.
One
more thing is when we have a large sum of money, we tend to spend also.
Yes, that is also
waiting for the 1 lakh to 1 lakh extra growth. Instead of that, we will be spending 2-3 lakhs rupees. That is one thing.
That will come. Then real estate will also come into picture there.
Yeah.
Let me take one plot. Let me take some gold. Then let me go for some foreign vacation.
I'll tell you one example. My friend sold his flat. Okay, he bought a new house. Okay, his account had some 35, 40 lakhs rupees. One HDFC guy has sold him that Sinche something, 16 lakhs rupees.
Sanchay Plus, Sanchay Plus.
Sanjay Plus, 16 lakhs rupees he has, he has invested, and he called me after around 1.5 months later and to ask about it. And by that time, I think that lookout period is also over. So I felt very bad that day.
Same thing happened when we were in Alain. One SDFC fund manager, he came, he said, I want to meet you. He was some friend's friend. He came to our house. He wanted to sell that SDFC Sanchay Plus. I explained to him, I showed him a simplistic portfolio mutual funds I'm doing through MFU. He said, does it go? He was a zonal head of South region, SDFC. So he has now started investing in mutual fund. He could not sell me SDFC Sanchay Plus. That's it. He's in our group also.
Yeah.
I just wanted to tell, because I wanted to tell you this from long time. This is a story actually. It is my own experience. Usually I don't trust any guys spending my money in their names. However, it happened so that it was in 2019. I had a friend of mine who is a doctor back in India. So they were having 4 years of investing with one company called Trillion Capital in Mumbai. So he is some big person who is investing, and my friend, a lot of doctors were involved. I think it was in paper also later on. So a lot of people, 25 lakh per person they used to use, and the return was unimaginable. First of all, I told my expectation of return per year is 10 to 12% is enough. But he was telling, the person who was telling, sir, we will give more than 24% return per year. But my friend who was invested with him for last 4 years have got 40% return. And he showed me the bank accounts which they have sent. I was actually surprised. Then what happened, because of greed. So I told, okay, I'll also invest 25 lakhs. So I invested 25 lakhs and I gave him. And first month they told 50,000 per month. They were giving 50,000. They were giving 2 lakhs per month. You don't believe this. Then they started 4 years they were given like that. I don't know what happened. This was in 2019 December. They told, sir, your fund for performance is only 50,000. I told her it's okay for me. 25,000. I was expecting for 25 lakhs. You are giving 50, no problem. After 2-3 months in January and February of 2020. So my friend who told me to invest immediately called and told me, please write an email and take that money. I told, why? What happened? So there is some problem in the company, so it is better to. So then I wrote an email, and that person actually replied saying that we'll give you your money back within 31st of March. Exactly on 23rd of March, there was a lockdown and whole country was shut down. So I think, I don't know what happened. Then finally, there was a lot of emails going from our place to that person investor. There are 150 doctors invested in this, and total 600 people across India, especially from South India and in Mumbai. Finally, the person who invested got COVID and died, the main person. So then it was a big issue because everybody's money. I invested 25 lakhs. My other friend was invested nearly 1 crore. And then other people, who is a chartered accountant from Mysore, was invested 8 crores. Because he put first 1 crore, it became 1.5, and he got it. He took, he made all his family people put money. So it was in a newspaper actually. And finally that person died. And finally, a lot of complaint. It went to an CID. We got the chairman and the directors got arrested. He said that the chairman and director was the son of the person who died, who was the big man. Then the only thing which happened was we complained, everything happened, and they told everything through NAC. NAC has a complaint registry, and they have an protection fund for the consumer protection fund is there.
Investor
protection fund. So everybody put online on this. I also put, and they asked for some queries. I also put. I never thought I'll get my money back. And I get an email from a protection investor fund that your case is registered and we approve yours, and they gave me 24 lakhs 50,000 to my bank account after they confirmed within 3 days. So my money came to me. It was shocking because CB did it to me. I'm telling you, this is my experience. And the only reason I could get this money because the person who took money from me really invested in the stock market. But there are so many things happened because a lot of my friends' money got invested, and it was a Ponzi scheme, something like that. So a lot of people are still fighting. So then this is a God's grace. Probably I got my money back. But a lot of 50% of the people have not got.
Thanks,
I think it is your money. I think you should use your money and you put where you want. I think this is the lesson which I have learned. And correctly in 2020 later, we got Dr. Deepak. He is literally brainwashing us.
I think those people are highly unprofessional in showing someone is investing there, showing their checks also. Many they show their checks, their names and all. No? It is like a plastic surgeon showing Madhuri Dixit's breast, saying that I've done the augmentation, you also get operated. So something like this. You're disclosing some investor's name, their checks, their details. They're keeping it right in front of you. And they're saying they have got this returns and they're getting check paid. It is like putting the name, the plastic surgeon, luring the patients by showing some implants and all of the real people, their photographs and other things. That is not professional actually from their part also.
No. In fact, I was no. Actually, this was my friend who got the money. He was showing me because I usually don't trust.
Not this.
My friend himself was showing.
Even here, they show this. They offer that 15% convertible debentures. They say this doctor is investing here. These are his checks. He's getting this money here. They disclose of everything. They say even in our hospital, this doctor is investing. Why do you want some others example? What are they doing with their money?
My friend himself told me because I told him no from last 2-3 years. So unfortunately, what happened was it is a greed. I think if anybody tells that the return rate is more than 20, that means it is false.
No, anything more than I feel anything more than 12% guaranteed or something like that, it's all fraud things.
Even thing I want to ask is the platform where you put your money. See, does it make difference? For example, we have a mutual fund in India, HDFC, ICICI, Zerodha, and back here we are using Sarva, Stashaway, or some people are using ADCB. So what is that? Some people are having confusion regarding this platform also. I am putting all my lump sum in one platform. Is it, if that shuts down, what to do?
No, even if it shuts down, the assets are held with the AMCs there, with the RTs there. So if the MFU tomorrow stops functioning, or even let's say Zerodha stops functioning, or let's say even Kuvera stops functioning, or any platform, Economic Times stops functioning, Paytm, doesn't matter. Your investments will be there with the AMC, with the asset management companies. So where does the fund go? Doesn't go anywhere. Doesn't make any difference.
What about this Stashaway and Sarva?
Sarva is regulated by Dubai and Abu Dhabi both. And the regulations are quite strict about it, and they have separate audit for it, and the broker is Saxo Bank there. So basically the securities are held with Saxo Bank for Sarva Invest, and for Sarva Trade they have this Alpaca is a US broker. So when you see the statement Alpaca, so they have that SPIC insurance also, like how you got 25 lakhs from the investment protection fund. If something goes defunct, they have the insurance of about $5 lakh dollars there. So up to securities up to $5 lakh dollars is secured over there in case something happens. Not the market risk, but the other risk of the broker going defunct and all. So the spike will refund that money same way how the investor protection fund did it. And Sarva, another advantage is it's local. You can add a beneficiary, and if you have a local will, many of us have a local will, so that local will also be implemented on Sarva because it's a local entity here. And other added advantages, let's say someone leaves the country and goes to India or goes to some other country XYZ, you link your any bank account which is in your name, any part of the world, you can get back your investments anytime. Liquidity is not an issue.
What about Stashaway?
Stashaway also the same thing. Stashaway is also regulated by both the entities. But the only product which I find helpful in them is Stashaway Simple. Other equity products are very high cost. They are mainly confusing the investors. They are having more weightage on. See, if you look at the world total stock market index, 55% weightage is by USA. And then Europe, then Australia, Japan, and all in that way. India has weightage of around 3%. If you look at their portfolio, they are giving a significant weightage to China. some of their initial portfolio allocation
they
was
have rebalanced their portfolio.
they keep doing that. Initially, when I asked them why 35%, they said no, we are having a strong objective on this, that, all those reasons, na? Personal bias. So why do we go by the personal bias? And they are buying, selling. Na? So buying and selling is not good. Any buying and selling will have tax and cost implication for sure. If they are churning their portfolio, if they are churning their ETF, that is also going to impact to us. Whereas Sarva, they have maintained the same portfolios. If you see them, na? If you select their risk level, they'll have VTI fund, US total stock market fund, one in developed economy, one in developing economy, then 5% in US real estate, and bonds, global bonds and US bonds. So that is ex-US bonds and US bonds. So what is the risk level? If you set it by 4/6, it is conservative. So 25% is in bonds and 75% in equity, and they are not going to alter. If the market is up and down, when you invest, make a new investment, they are going to allocate as per the funds. Some funds will receive more based on their algorithms, but the funds have remained the same. If you see the funds, they have not changed the funds at all. Invest, trade and all, I would never go through trade option, because you know about the estate taxes. Will be subjected to estate taxes. That will be huge amount. If anyone is a long-term investor, assets more than $60,000 held with US or US assets, it will be subject to estate taxes. That is a real risk which no broker will tell us. So in Sarva Invest, it insulates us. No? Even if you are paying an additional charge of 0.8%, that 0.8% is going to be 8% over 10 years. Fair enough. At least the wife, kids will not have to beg the money and pay 40% of the corpus to the US government for no reason. Such tax is not even seen in India. If
what is that actually? That that estate tax is only for more than 60,000. It is only after the death of a investor.
Investor. Any assets, any US assets held more than $60,000 will be subjected to 40% estate taxes. So let's say you are having $1,60,000 there. So $1,60,000 minus 60, 1 lakh will be subjected to estate taxes. $40,000 will go to US, and that too with all the paperwork. You'll have to give the death certificate, succession certificate, court orders. You'll have to produce to them.
But without that, you can log in and redeem, no?
That is there. That is a trick.
I'm just trying to tell.
Yeah.
That is possible, right?
It's possible, but you know, things are linked to one of the IDs here locally, so everything will get frozen, right? In India, government to come to know when the person has died will depend when you have registered the death certificate there, which has a long time also, and some people may not register also. The banks will be continuing, other investments are continuing. Succession planning is least thought about in India.
One way it is good.
Yeah, one way it is good, but lot of wealth is also lying unclaimed.
Yeah, how to claim those wealth of others?
Ask the immediate family members to adopt us. We'll initiate the process. We'll get some money.
I don't know what they're going to do with those wealth, which I see in the paper. It is in lakhs of crores.
How you got the money? 25 lakhs is from that investor protection fund. Some of it is going to fund that. So government is also going to. It's not free money. It's some investors' money going to some other investor.
At least protected.
Yes. That is how protection comes in.
Deepak sir, I have a question.
Yeah, madam. Yeah, tell me.
Sir, the NRI can't buy a 7R gold bonds?
Yes. No, they cannot buy. But madam, why do we have fascination for gold so much?
I had a question. One of my friend asked. I know you people were discussing about the gold and real estate, but you know, I'm being a lady, I am a little bit towards the gold. So I just wanted to ask.
So if you are liking gold jewelry, buy physical gold. Meet the requirement. Finish. I need a watch to wear. Buy it. Finish it. I need a necklace. Finish it. It's for consumption.
But one of my friend was asking about this, so I just wanted to.
Now I'll share you a video, madam. When there is shown a 7-year rolling return of gold. Now sovereign gold bond has a holding period of 8 years, right, madam? So if you invest today, after 8 years, if you hold till 8 years, you'll get tax-free returns. Now, if you see 7-year rolling return of gold, 7-year rolling return is after every 7 years, what is the return? That returns can range from 0.5% per annum to 12%. It is pure luck, very pure luck. And
Okay.
unlike any other investments, you cannot make additional. No? You will have to buy one more sovereign gold bond that will have its own lock-in period of 8 years. So you will not have access to whole investments at one go. So the only reason you have to buy sovereign gold bond is, let's say tomorrow you need something for your daughter's wedding after 8 years.
Yeah. Yeah.
At that time, you buy today's value in sovereign gold bond. At least you will be guaranteed to get that much gold guaranteedly after 8 years. That is the only reason. No other reason. Because we Indians have too much attachment to gold as investment. First of all, physical gold, if you invest, my father is a gold jeweler. Sometimes I happen to sit in the shop, that is years ago, when I saw the margin of profits there. I asked my mother, "Are you butchering the customers?" He said, "It just works like that. Every jeweler is doing that." We are not.
Okay.
So only people who can make money in jewelry is the jeweler only.
Okay.
If you are an end user, you are 100% in loss, because for jewelry you will be paid for investments. I'm not speaking about consumption. If I like a chain, I'll buy it. I like it. It is my hobby. I'll buy it. But for investment purpose, because the gold rate will be different. 15% is the making charge. 10% is the wastage. You are outrightly starting your investment journey with a net worth of negative 25% minimum.
Yeah. Yeah.
And to come to your buying price, how much gold has to appreciate by 25? It has to appreciate by 35%, not 25%. So how long will the gold take 35% to achieve that returns? How long? That time is lost, right, madam?
Yeah. Okay.
So
Okay.
gold
Fine.
jewelry,
But
sovereign
by
gold bond,
chance, like people have already invested in a sovereign gold bond, is it there will be a difficulty during the withdrawal or anything like that?
no difficulty. If tomorrow, if the government makes the rules stringent, let's say they say that they know who is the NRI and who is not, then there can be a penalty. Why did you invest into it? Why do you want to go the illegal way? And many people have done that. They have invested sovereign gold bonds in their parents' name, their residents. Now, tomorrow, if something happens to the parents, madam, something happens. Now, as per the rules, the respective religious act will come. Many of our parents don't have any will nomination in place. So succession will come. If the person is a Hindu, it will be divided equally among all the legal heirs. Son, daughter will get equal shares. Then wife will get equal share, or wife is gone, husband will get equal share. No, not husband. The kids will get more share. Husband is the second degree there. So it will be equally distributed. Now, if someone is investing in parents' name, our assets would definitely go to someone else also. We do not know our siblings will be crystal clear there. So people
I know.
make FDs in their name, senior citizen, just to get 1% additional extra here. Just because of love for gold, they are investing in someone else's name. Investment should be in the name of the person who is earning that money.
Okay.
Who is earning? It is a common family pool, madam. Even if wife is not earning, and if husband is investing in wife's name, clubbing provision happens. The taxation will be on husband only. So easy way would be invest in anyone or survivor mode. Something happens to a husband, it is all wives.
Okay.
Something happens to both, all to the kids, madam.
Okay.
So we investment is no emotions attached. Your goal fulfillment is important. Goals can be child education, child marriage, our own retirement. At that time, emotions should not play a role. Which investment instrument we select?
Okay. Thank you, sir.
What is your view on NPS buy?
NPS I would definitely avoid. See, NPS is tax deferment. Unless it is compulsory, there is no only it is beneficial for them. It is beneficial because people as such don't have adequate asset allocation to equity. So good, in one way it is good for them. Second thing is, once the NPS matches, no, 40% of the amount you have to pay annuity. That annuity is locked in for the rest of the life, tier 1. So 40% of the amount accumulated at till the age of 60 years, you'll not get to see all of it at one go. So that is used to buy annuity. That annuity will be paying the pension. Actually, NPS is not paying the pension. The annuity which we buy is going to pay the pension. And that annuity will be taxed at the tax slab. So it will be basically more of tax deferment. Tax to pay karna hi padega. At that time, if our income is less than the taxable income, we are okay. But if you have other incomes, we'll definitely be taxed at that time when it will hurt the most. No? and 40% may be a huge amount there.
Yeah, but at least 60% will be tax free completely.
Yes, tax free. That 60% will come. You'll redeem. Where do you park it? The next question will come. Where do you park it? You have to reinvest it somewhere. Again, the question of investment will come. One more basket. Why not keep it in a basket from where you can withdraw in any stage of life? Not only 60. Why do we wait till 60 to retire? We can retire before that. So when you are investing in instruments which have flexibility, both in investing and rooming it off, that will give more flexibility to our life. Actually, we are glued to that thought process that we have to save taxes. We have to save taxes. NPS is by Government of India, and many are having the misconception that it's a guaranteed product, which is not true. It is again market risk. NPS is again market risk, market linked. Now, the NPS is managed by the fund houses who are also managing mutual fund. Now, imagine we have two businesses where we are getting more income. One is a 5-star hotel and one is a 3-star hotel. We are getting more income from 5-star. We will give more quality there, right? And less quality here. So NPS investment objective has no clear mandate. The fund manager can randomly, haphazardly invest in equity bonds as per that ECG and all, which we keep, no? Equity, corporate bonds, government bonds.
Government bonds and
Yes.
alternatives.
Yeah, alternatives. So they are the bosses to decide where they invest. So investment objective is also not clear. Unlike mutual funds, where at least we know the objectives are clear. And if there is any change in objective, the investor is given a chance to exit out of from it. Because you want to continue, you want to exit without the exit load also when there is a drastic change in the investment objective. Here there are no such rules is applicable unless the insurance regulation comes in, makes it more transparent. Until then it is a opaque thing, and 40% of corpus is locked for the rest of the life.
Deepak bhai, is it better to buy a house in UAE? Like, because we are paying a lot of rent here.
Yeah, yeah, that is there. That is the common thing. We think rent is the waste, and we instead of paying rent, we can buy and do that. Now, I have a cousin who has brought a house thinking that he is paying rent. He has brought it for 2.4 million. So that is he was paying a rent of 1 lakh initially. So that 2.4 with bank loan, significantly with bank loan, and that is equivalent to 24 years of rent, right? 24 years of rent. So that much equity is locked for 24 years. You're committing yourself for 24 years of rent outrightly.
No, but the thing is, if you go for like 1 million, right now we are getting for like 1100 SFT for 1 million, we are getting in Abu Dhabi ready to occupy.
Yes.
So, and we are paying rent nearly 60 to 70,000 per year.
Yes.
Right?
Yes.
So I think instead of going for a huge money, why can't we offer for like 1 crore or 2 crore? That will be sufficient, I think.
Yeah, people who have successfully gone through it are lucky enough. Now, let's say we have a job loss, or we have to move back to other country or home country for any matter. How are you going to pay back?
No, it's not for loan. If you have a liquidity.
If you have liquidity, go for it. A small amount of loan for next 4-5 years, go for it. Because you 4-5 years you'll have liquidity, and that liquidity, if it is invested and you take loan for 4 years, 5 years, you decide the tenure. And if you know that you're going to stay for next 10 years, then makes sense going for it.
Okay. And for if you want to sell that time, do we require any?
Selling will depend on the market price at that time.
No, if we get any risk like that, we need to we can sell in the real
You should
estate.
get a buyer, right? You should get a buyer. Many people say that we will move back to India, we'll continue letting it out to someone. But if you let it out to someone, a broker comes in, he's going to eat 15 to 20% of a rental yield. And apart from that, the global will be taxed in India when you're an Indian resident. Because if you let it out for rent, after you no longer decide to stay there and you move back to India, you'll have to rent it out. So who is going to manage it remotely? You'll have to let out the maintenance to someone. And that someone, if there is a tap repair of 100 dirhams, he will charge you 200, 300 dirhams for you. The maintenance cost is going on. And if you have let it on to a broker, that broker will eat minimum 15 to 20% of your rental yield. Plus, Government of India is going to eat 30% of your global income.
Okay.
Personally, I feel remotely managing is a very tedious thing unless you are there nearby doing something.
Even nearby also very difficult by.
Yeah, very difficult because
both mushkil.
tenants have their own. Now we are tenants. Anything happens, we'll definitely bother our landlord. ये हो गया, वो हो गया, क्रैक हो गया, पानी लीक हो रहा है, बाथरूम
नहीं
लीक हो रहा है.
वो रहने दीजिए. If a tenant is a fraud, then it becomes very difficult to vacate him.
Yes. Many cases where brother of a police inspector also had to pay the tenant to evacuate him.
Definitely, my friends is a police in police department only. He only struggled to evacuate the tenant.
That
He
happens.
literally paid. He literally paid the extra out of the pocket money and evacuated him.
That is the risk which we don't see coming in real estate.
Definitely risk is there. Recently, the real estate has moved considerably in India.
Yeah, if you think like I came in 2013, even that time I thought of taking one house without going for any loan. So I thought by seeing some videos and taking some suggestions, they told not to buy the flat in UAE. So since last 10 years, I'm paying rent. Now, if I realize, like I have paid half of the amount for just for rent. If you have taken that time, I think my property is already available for me. I think.
No, other thing is if we save enough and just not look at returns ki ye FD 5% दे रहा है, and if we are sticking on to asset allocation based investments, we would build a corpus more than necessary to buy any purchases later on in future also. But the thing is, we have to save, we have to invest. Saving is one aspect and investment is another. Majority of us don't invest. Well, we think about FCNR ज़्यादा दे रहा है, we'll go there. Local bank deposits 5-6% दे रहे हैं, let's jump into it. We are hesitant to commit that money in financial asset class for a long term. Whereas for real estate, we subject it for decades together. 1 decade, 2 decade, we'll not worry about it. But here we are seeing the valuation on day-to-day basis. No? We tend to be hesitant. We don't want to commit a larger sum. And that larger sum, even if we have, no, we'll be investing in tits and bits there, which is not enough actually.
Okay.
Ravi bhai, what's your take on real estate right now? What should be done? You are a king in that.
No, I'm not a king. So yeah, commercial real estate has a significant value in metro cities. Okay, so the rental yield that I'm seeing is nearly 1.5%. Okay, so some of the real estates are really doing good, and again, as you are aware, once you put it out, the list of the things that we should look into before buying the property. So if you follow certain things, definitely we can make a good fortune out of it. Whatever I done, except my flat, 2-3 commercial things that we have done. So far so good. It's going well, and especially for example, one of my friend called me and asked for a suggestion that he's running a clinic in that particular space. It's just like divided like just like a flat. There is a commercial place and he has a two shops. So he asked me whether to buy or not. I straight away told him to buy because that owner was selling that property to somebody else. Okay, because he had already established practice, and he bought it for, I'll tell you the exact amount. He bought it for around 85 lakhs, including registration around 90 lakhs, but he was paying only 26,000 rupees rent. Okay, we may consider rental yield is less, and he should have not gone for the this one purchase. But you know, that guy owner was selling it to another same profession guy. Okay, so in that sense, I told him to purchase immediately. Okay, that has secured his livelihood also. So what I mean to say is, so far as real estate, my take on real estate is, if it is really, like, for example, if I have a hospital, if it comes for a sale, even if it is a little extra also, we should, go for it. So same thing has happened recently with one of the thing. In one of our hospital, next to the hospital, one site was for sale. Okay, say the market price was around, say, 1x amount. So we really paid uh, uh, x plus 4,000. Okay, for that piece of land, because that piece of land was, under the eyes of our competitor also. So if our competitor would have come to next to us, it would really created a problem for my business. So the real estate has to be, looked into in that angle. So when it really makes, for example, your hospital or a shop or whatever businesses that if it is really adding to that, and you should consider it as a part of the investment, rather than a part of the investment into the business, rather than an investment into the real estate. So that will definitely add a value to it. And the property that I was telling, if I add some, so for example, another 20-25 rooms to that particular building, so definitely my income is going to increase. And my other expenses, for example, expenses towards the staff, for example, I have a same receptionist I can use, same pharmacy I can use it for that. Only if I, so far as manpower is concerned, only the nursing staffs and other people can be added. And as the property is next to me, and even if I pay 4,000 5,000 rupees extra more than the market value, that will really give me a very good stability in my business in the forthcoming years. This is my take on real estate. And any random buying a site which is going to grow after some years, I think the lot of litigations are there, lot of problems are there.
So from a business expansion point of view and business risk management point of view, it makes sense, right?
Yeah, definitely it makes a sense. Okay. So this is whatever the real estate, that investment that I've done. So with this angle, I've done it. One I've done without this angle, and I mean we are little struggling there. I think we can overcome that also in due course of time.
Yeah, that's true. Thank you very much. Other thing is, those who have been investing in Sarvana, if we look at their portfolio, 5% is going to invest in real estate. So if we have that urge that real estate is not there, 5% is coming there, and without the headache of having to physically hold it or manage it or think about where to buy, where to sell, 5% is there holding. And if the portfolio grows, the dividend return from this REIT ETFs is quite significant actually. I think next week again we can have the same session, right? Sunday, if everyone is free.
Before you close down, can I ask you a question?
Yeah, sure, sir.
भाई आप लोग सब धुरंधर हो इन्वेस्टमेंट में. There are still people in this forum. I don't know. Is there anybody? Do I have company or not? People who always feel that they have missed the bus. उनके लिए कोई आशा है आगे चल के?
सबके लिए आशा है सर, सबके लिए आशा है. I'll tell you an example. My father, he was scammed. He's 68 years old. Some money was siphoned out from his bank account. He gave his debit card details and all. Then he understood the risk of keeping money in the bank account. At the age of 68 years, he started investing in mutual funds. Now he was thinking about post office में senior citizen को ये देगा वो देगा. So he's not investing significant in equity. 10% of that asset is in equity. So he has understood also the true potential in the few months which is invested now. So one can start anyway. We should not have that fear of missing out. The right time to invest is when one has surplus, and when one is goal-based investment, they will definitely stick on to equity and debt funds only, purely. They would not venture into multiple things, invest here and there randomly, which is difficult to manage. So there is nothing like missing the bus. Any age is appropriate age. If जिस दिन उठे लगा सवेरा है, start investing and keep the things portfolio simple. Even if the market has gone to 72,000, and if today also someone aged 50 years is thinking of investing in equity, they can go, but with a small allocation. Nothing is too late, sir. Life expectancy is 80 years. So if a person also starts at 50 years, they have 3 decades of life left still.
Okay.
An anecdote I want to tell you. Deepak bhai, my brother blessed with a baby girl in
Congratulations, bhai.
2015.
Yeah, yeah.
In 2015, so my wife was like insisting to give a gold bangles and other things. Okay, so as I was a fan of yours, so I suggested her like I'll open a mutual fund portfolio in my mother's name, and I contributed initial 1 lakh towards Rupa Frontline. Okay, and I okay, so your favorite fund. So I contributed 1 lakh, and after that I forced my brother to invest every month whatever amount, like 25-30,000. So he is now 8 years. So now the corpus is around 40 lakhs. Okay. So I told my wife this is what is the thing. So even if invested gold, whatever the gold, like whether it's given return or not, but the the journey that took that day, it has changed the things. If I had given a gold bangle, okay, that is there.
It is
They have
just lying in the
already had a
cupboard there.
cupboard there.
Yeah.
So now the money has been invested there, and I forced my brother to invest in my cousin's name. So that that has really that's how the asset class is. It is really, it has the overall portfolio. If you want, I'll share you. It has grown at 20% CAGR, and even my portfolio is 13-14% because I churned it, because my brother did not do anything because he doesn't know much. So his portfolio is giving at 20%. When the so-called some kind of knowledge in this, I am getting a CAGR of 14%. So what I mean to say is this is the thing that really change the way we invest and grow the money. Okay.
Sometimes
I just
ignorance
think,
is bliss.
yeah, that is
Definitely.
definitely true. Very true. Very
Definitely.
true.
See, my in 2016, I think my sister's investment I done because that time, one to do a KYC, we had to purchase at least some amount, at least 2,000, 3,000. UTI mutual fund was next to our hospital, so I did an investment of 2,000 rupees. Now it has grown to 8,000 rupees. 2,000 rupees UTI tax savers fund, that I did not know anything. I just went and purchased that. 2,000 rupees had gone up to 7,500 or something like that. And my sister never sells anything. Okay, she keeps everything, and her CAG is also 21-22%. So what I mean to say is staying invested, doing doing nothing. Doing selling and something like that. That will really help the portfolio in growing it.
That is really true, Ravi bhai. People who don't do anything just blindly put it also, and knowing the basics, they actually make more money out of it.
Yeah.
And you did the right thing. You at least put that mango seed, and that has grown into a big mango tree. And by the time she is 18 years, she would have a significant corpus,
Definitely.
and they're ready for with the higher education, no matter what.
Yeah, definitely 1.5 to 2 crores. I think it can
100%.
reach a
Yes,
potential
yes,
to reach
yes.
at least 1.5 CR.
Yes,
So that
definitely.
will be good for her education. So now, my brother is telling, I need not worry about my daughter. At least her education is taken care of. So then I can really concentrate on other things.
At Sanat said, no, you tag it to child thing, no one will read him. That emotional
Yeah,
attachment will be there. That thing should be there. People who have been investing in SDFC child fund and all, no, even though many of us say that don't invest in named products like child retirement and all, if you name it in the name of child HDFC child fund, and if you keep investing, they would likely make more money than people who speculate, who track on day-to-day basis and all.
Definitely.
Anyone would want to add anything? Ravi, by next week, you are ready? Next week?
Yeah, definitely, bhai, definitely. I actually,
Do,
mean,
do you share that
I
portfolio of that?
my
It will be
sister.
motivation. Yes, yes, it will be
Yeah,
motivation. 8 days of investing in name of child. It's
yeah.
real life example.
I'll share you that portfolio. Okay, huh?
Yeah, yeah,
So I'll definitely share that. Okay. Hmm?
yeah, 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 Ravi bhai. Yeah.
I'll definitely do it actually.
Me-
I want my wife to, you have to motivate my wife to, understand something about the finances. Whenever I start telling her, by the time 9:30, she'll the 2 3 words she'll hear and she'll sleep off. She says, why are you to worry when you are there, correct?
that is the biggest worry then,
Mm.
actually.
Sir,
Because
I
today,
think that is a scenario with most of
yes,
people.
yes, sir. Yes, sir.
Maybe
Yes,
we,
sir.
we,
But
we are we are to be
anyway,
blamed also in one way or
yeah,
the
I
other
know.
way.
And I want to tell nearly more than 500 people I made them to invest in mutual funds. Okay. Huh? And literally from, opening the accounts to KYC, to selection of the funds, all the things like opening a CAN account. Uh, last week only I did it for my classmate. Okay. She was not aware of anything, but I made her to at least invest 25,000 per month.
That is actually a good thing. There is one
Mm.
story, na, that
Mm.
there is one village where there is a competition of who grows the best corn there. So
Mm.
there is one
Mm.
farmer who is growing the best corn, and he's sharing his secret, the seeds, with other farmers also. So
Mm.
he's interviewed. He said, he's asked that other farmers are your competitors. Why are you sharing your secret with them? He says if they are also growing good corns, there is cross pollination, right? Bees don't differentiate whose plot it is, whose farmland it is. So if their corn is equally good, my corns will also get pollinated by the good seeds, good products only. So everyone is going to get benefited. Here also, if we motivate others to come into financial asset classes, we also tend to get benefited out of it. More people participation, less dependency we'll have on this foreign investors and other things. Domestic institutional investors will have an upper hold, which we have been seeing now in past few years. No? Less
Yeah.
reliance on foreign participation and all.
One more thing is most of my friends are in taluka place and district place. They don't pay taxes, and because of mutual fund, I made them to pay taxes at least.
That is good. That is good. It will lead on to more economic growth and other
More
things.
economic growth. So many people will ask me why, what do you get? I get my country will get at least
Some tax
taxes,
revenue.
some tax revenue, and it will reduce my burden also. Hopefully, my 30% slab will become 25% in the next
Yeah, yeah,
three
true.
four years. Karke.
If there is huge participation by taxpayers, maybe they may start to decrease the
20,
tax slab. We
yeah,
don't know.
25%. Yeah, already. So one
Already
thing,
new tax,
one good thing is new tax regime is 7 point up to 7.5 lakhs
no,
rupees.
no
People
tax, no
are
tax, no
no
tax.
taxes, and more people will get a loan and other things. So that is a
Yes,
good
yes.
for the economy. In fact, if they increase it to 10 lakhs, I think I mean that will be a great
Yeah.
move by the government.
I think next Sunday we can meet up again, all of us.
Definitely.
So I'll share the link right now, and let's at least have 1 week of time to everyone to participate in a good numbers next time at least. Some topic
Yeah,
which we can think about.
yeah, definitely. Yeah, you can think about insurances.
Yeah,
I
insurance
think
is very important, very
insurance is a
neglected,
very
very
neglected.
neglected.
And I'm telling you, being one of the person who is managing the hospital now, the expenses, the healthcare expenses have become too much in India. Uh, Not only from the patient perspective, even from the person who runs the hospital. The rent has increased considerably. The cost of the instruments, the manpower, especially trained manpower, is so significantly increased. So the hospitals have been forced to increase the rates. Okay, so I think insurance minimum 10 lakhs. I think 10 lakhs also in next 3 4 years. 10 lakh base policy will becomes less. I think so that we have to cover that part. And some of the insurance, I want to expose some of the insurance providers, because they say they give a very good coverage like 1 crore, 2 crores. And when it really comes to the payment to the hospital and to the, even if they go for a cash, reimbursement also, they don't pay even 50%. Okay, just we'll have a detailed discussion about it from the angle of the both from the customer angle as well as from the service provider angle.
So next week, insurance by Dr. Ravi category, right?
No.
No. You are the right person actually. You, Dr. Amit Gaur, you people are better placed.
Amit Bhai
The
is the best
practical,
thing.
the
Yeah,
practical things.
practical
Yes.
aspect of that. I just wanted to enlighten the people in certain insurance are really bad, and we're not supposed to buy them. I think if we are in that condition, when we come
Which
for
are those insurance? We'll
have a detailed discussion on that day, definitely.
Sure.
I think we should not look at the premium alone. I think from the both from a customer point of view as well as from the service provider point of view. So we should
pay a little higher and have peace of mind.
Pay 5,000 extra and be sure about the things.
Actually, many of us might not have this first-hand information, sir. Though because we go by the people from the market side.
Yes, sir.
But if we can get the first-hand information from the
definitely, I see
side,
it, sir. Because I'm managing my hospital out of compulsion. So I've been forced to do this. So I'm seeing the bad bad and good part of the so many things about the hospital.
Exactly. So
both from the
but
customer
you'll have the
point of
first-hand
view.
information.
Yes,
So
yes,
it's
sir. So
better.
that definitely we'll have a detailed discussion about it. I think at least those who known to us will at least get benefit out of it.
Yeah.
So,
sir, Deepak sir, I have one suggestion. Maybe
yeah,
if we can fix the time, like every week 8 to 9:30.
Yeah. That is good. I agree, sir. I agree, because when we maintain that uniformity and we don't break it, those who are free, whoever is free, let them join. Whoever are not free, they are
if we
good enough.
fix the time, it will be easy for the people to plan their schedule, and then they can.
Once this schedule goes on unaltered for a few weeks, people participation will also increase, sir.
Yes, true.
And when we stick on to the topic and we speak to point and more practical things like Dr. Ravi category and all would be sharing later on in next week, that will have a major impact. What is the real life scenario? Because all we know is the features and all given handsomely on their website and all. We do not know the practical constraints, the practical issues which may go on. And if we know the product and we know the practical implications, it will have a good informed decision making by we Aam Aadmi and all.
Yeah, true.
So practical experience really matters actually. So we have good people here. They will definitely share. Ravi category, sir, he's open. He is free person. He'll definitely share many things and dark secrets next week, sir.
Thank you, sir.
Thank you, sir. Thank you, everyone.
Thank you, bye. Thank you, Deepak bhai.
Thank you, everyone.
Thanks, Deepak bhai.
Take care. Thank you.
Thank you all. Bye bye.
Thank you.
Bye.